Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. And gold continues to be a repeating pattern here over the last couple weeks. So brought Rob back in to talk a little bit about the gold action and what we see coming over the next couple weeks. And then what we think is taking place in the currency and central bank and the Federal Reserve that may be continuing to affect this very clear change in the average American's mindset over the last month about what do we see as being safe and what do we see as being concerning. Following on the heels of everything happening in the banking industry, so much currency getting moved around in the U.S. today. Rob, you've been through this a few times.
We have.
2008, 1987, 1999. What am I missing?
You're not missing a thing. The only answer that we've ever had going back that far is to paper over the problems by creating more money.
And I think we're definitely doing that at some of the charts on the Fred website you and I were looking at earlier that we're going to pull into the show here in a little bit. So does it surprise you?
No, not at all. They've been backed into a corner for a long time. I think that we'll probably see another quarter point increase in May, but I'm not sure going forward. I think they may wait out the summer months before they embark on raising rates again. The interest payment on the national debt continues to climb. What was it that we were looking at? Is it 16% of government expenditures so far?
Yeah, I think it was 16%, and it's by far the largest piece of all the major expenditures, except for things like, say, military spending.
Social Security.
Yeah. So you're looking at significant outlay in future interest payments that are going to continue to stack on top of that, because I don't see any pullback in government spending going forward either.
Not with this current administration. And the average maturity on the national debt is only about 5 years. So as these short-term treasuries continue to roll over and readjust to the higher interest rate, the interest payment itself continues to climb.
Right, and we pulled a chart off the Fred website earlier today, and I'm looking at, say, the federal government current expenditures and interest payments stretched out over the last 60, 70 years, going back to 1950. And the way it has skyrocketed since 2020, there's no comparison to it. Not even 2008 did we see anything like this, going from around $600 billion a year up to almost $900 billion a year. I mean, we're pushing $1 trillion just in interest payments.
Yep.
To the Federal Reserve Bank.
Yeah, and that's a huge chunk of the annual expenditure of the government. I mean, I'm telling people that the best we can hope for is Jimmy Carter inflation. This is definitely not transitory. Plus, you have everything else going on in the world.
Is that robbing Peter to pay Peter? Not robbing Peter to pay Paul, but robbing Peter to pay Peter back at a higher rate? I'm not really sure. The system never made sense to me. I don't think it made sense to anybody outside of Jekyll Island 100 years ago, so go figure.
And we should probably take a look and see what the balance sheet is looking like, too. The last time I was with you.
I did before we talked.
Good for you.
So the balance sheet, okay. So the U.S. Central balance sheet, we've been talking about this the last couple weeks. All the work that they had put in over the last year, they gave up about 2/3 of it.
So far, wow.
It has come back down since then.
Okay.
So we've come back down about 1/3 to 1/2 of what we came back up.
Okay.
And I've got the chart on the screen now.
So there's a lot of demand for treasuries, so the Fed's able to sell into that demand. In spite of the BRICS countries stated that they're moving away from the dollar and going to start doing their own bilateral trade agreements, which, by the way, these bilateral trade agreements have been talked about and marginally put in place over at least 7 or 8, 9 years.
Sure.
So this is not new. But the aggressiveness of these different nations, whether it's Brazil or Russia or India or China or Saudi Arabia or South Africa, they are aggressively taking advantage of our weakened posture due to the lack of leadership coming out of D.C.
Well, it feels like checkers versus chess.
Yeah.
Like you've got, for a good number of decades, you've been seeing some of the Eastern countries and South American countries start to try to create something that can exist outside of major dollar crises and outside of just a massive dependence on the, let's call it the modern West.
Right.
Led by America and Western Europe.
Yeah, this is not new.
No, they were writing books about this. I mean, you and I were reading books about this that David gave to us 20 years ago.
Yeah.
So this isn't new at all. So they've been setting the pieces up on the board for 20, 30 years.
Yes.
And like you said, they've started to move those pieces in over the last 6 or 7 to where they're now willing to step out with some of the problems taking place in the Western world and some of our at-home financial concerns.
Right.
We have less ability to go out and exert OPEC authority like we did back in the 80s and 90s.
Right.
So you are starting to see that. And India has now recently come out and said they're looking at other options, one of our strongest trade allies in the East.
They absolutely are.
So we're not just losing people that we have traditionally, I don't want to say considered enemies by any means, but certainly considered confrontational potential for a number of years. Well, now we've got straight up allies saying we're also going to be exploring other options alongside OPEC.
Which is to their advantage. I mean, why would Saudi Arabia increase production when we've depleted our petroleum reserves?
Right.
They're doing what's good for their country.
Of course, just like we did. You'd much rather burn someone else's oil.
But we're not doing that anymore.
Right.
We are no longer acting in our own best interests from this government.
And on an international scale, you're talking about the U.S. Central Bank getting to move back towards potentially diminishing the balance sheet again and an increased buying of Treasury bills, which is obviously attributing to that, but it ain't coming from overseas. It's coming from domestic concern because I look at a chart here of the dollar index, the DXY index, the dollar's back down again. In fact, the dollar's back down almost to the 2023 lows back when we hit right just above 100 on the dollar index back at the beginning of the year, which is putting us back to, middle of 2022 numbers. And it's very likely we could see the dollar index continue that downwards trend it had been on for decades.
And gold has definitely responded to that, but I think that I agree with you that we're going to see a little bit of a backup on the price of gold from where we are right now, but you wouldn't know that. Demand continues to be strong here, but futures-wise, what do you think the price of gold could drop back to give our clients an opportunity? It's not going to be a lot, but it's something.
So that's a great question since we're a gold show and we haven't really mentioned gold yet, so appreciate the segue there. Gold by every measure is significantly overbought at this point. We've seen nothing but upwards momentum. We've put in some higher high after higher high after higher high and no lower lows going back to the beginning of March and a move from 1,800 to over 2,000.
Yep.
That's what, 13% move in the course of a month?
Yeah. Well, I fully expected gold to come off of the 1,800 mark and beginning its C wave back up again.
Right.
I think we're still going higher. I think over the next 6 months, we're going to see gold somewhere between 2,300 and 2,500. But in the meantime, we are due for a little bit of profit taking.
Sure. So we're now seeing a high that we put in, at about 2025, 2030 here a couple days ago. And we're coming up attempting to retest that again today, but we seem to be falling a little bit short by the close of today. So by the time this show goes live, or maybe Friday this week, if we haven't put in a higher high at that point, I would argue it's pretty likely we may see a little bit of pullback here, but that's completely reasonable. And you have a 12, 13% rise in a month when you're overbought by just about any indicator. Oh, where was the 200-day moving average? By my account, I think it was around 1790. It may be a little higher. So you've got these massive Bollinger Bands that have formed.
Right.
We haven't touched the 200-day moving average. Even the last time we came down, when we came down back at the beginning of March, we still missed it.
Now, if we just use the Google 200-day moving average, which is based off the June contract, we're at 1831.
Right.
But that's the June delivery month.
Yeah, we're not quite there yet.
Not quite.
We're still a couple months to go. There's a lot of numbers below here that we could pull back to that doesn't say anything shy of incredibly strong future bull market is going to continue.
But let's take a look at where the demand is hitting. What are you seeing the demand at? I can tell you what I'm seeing.
Demand could care less what the price is right now.
Right. But I can tell you what is being bought. In the gold market, it's fractional coins.
Yes.
Quarter-ounce gold eagles are over $600 a coin, and that's our number, which beats everybody. That's over $2,400 an ounce. 10th-ounce gold eagles, we're at $250 a coin. That's $2,500 an ounce. And European fractionals are very hard to come by.
Remember when this started to happen in silver 2 years ago?
Well, talking about silver, the demand in pre-65 dimes, quarters, half dollars, and the older silver dollars, virtually unattainable.
$35 an ounce when I
Yes.
priced them out this morning.
Yes, just for junk silver. And there is no slowing down in demand. As soon as that product arrives, it is gone.
Right.
2 of my clients have bought over 20 bags so far this week. As soon as it comes in, it's gone.
So it's amazing that that demand hasn't slowed down in the products that the average person is going to want, like you and me. Because if you get into the bigger gold products, even up to 1 ounce coins are still outside of the American Eagle. I mean, the American Eagle is popular and people want the popular coin. They want the thing they've seen on late night infomercials, but other stuff is fair.
Well, no, but I'll give them credit. The Gold Eagle is a 22 karat coin, as is the Krugerrand, 22 karat coin. The Maple Leaf is a 24 karat coin. So even though that the Maple Leaf and the Eagle are qualified for retirement accounts like IRAs and the Krugerrand is not, there's a reason why people would rather have a more durable coin, less likely to be damaged. So I understand why people are willing to pay $2,200 or $2,225 for a Gold Eagle, because there's a back-end market. Those coins can go into retirement accounts, and they're qualified for COMEX delivery where you can't put a Krugerrand in a retirement account. And nobody wants to be worried about how damaged a Maple Leaf can be if it's mishandled. Nobody wants that problem.
Or you could be me. Since we're playing options right now, I'll take the Maple Leaf at $50 or $75 cheaper all day long, and I'm just going to keep it in its case in a very safe place.
Right.
And I think what we're getting to is you do still have options depending on what you value in your personal precious
Correct.
metals portfolio.
Correct.
But the options are thinning out.
They are. And demand is increasing. Delays are starting to be experienced, especially in the smaller gold coins. Delays in junk silver are increasing. I'm looking at some of the online guys that I actually like, and they're 2 months out on delivery for junk silver at much higher premiums than we are.
I think you and I, or maybe Tori and I, talked about that a couple weeks ago. What makes me nervous about that is I wonder if they have the inventory on it, and if they don't, are they going to go shopping for it?
They're going to have to.
So,
we saw that happen with Silver Eagles
Right.
last fall, where they committed to Silver Eagles and then came crying to us, we need Silver Eagles. And we were able to come out of 700 to 750 Silver Eagles per 1,000-ounce bars, and our clients were ecstatic. They get to capture 250 to 300 ounces more silver in the exchange.
Right. Because 3 weeks ago, you could get $19 out of your junk silver per face value dollar, and today you can get, what, 23?
Easily.
24? And silver's only up $1.50.
Right.
Now, this is going to take time. You know, we're talking about this playing out not over the next couple of days, but maybe over the next 2-3 months. It's already been 2 or 3 weeks, maybe over the next month and a half. There's a good chance you might see some decent premium jumps in some of that stuff.
Yeah.
And I know I mentioned this a few weeks ago, so let's continue to be patient. But if you are a junk silver bag owner, maybe just jot down your inventory and keep listening every week, because there's probably going to be an opportunity to, say, swap into 100 or 1,000-ounce bars.
And it can happen with Silver Eagles again, too.
Yep.
Yep.
So there are things you can do as a gold investor during the runaway periods of the bull market that can still continue to benefit you. You can continue to make small additions to your portfolio on a regular basis. You can look for these pullbacks, and this is why we talk about market pricing. I'm no fantastic market technician. I just know that history tends to rhyme, and that emotional reactions to market moves tend tend to overplay their hand and then fizzle out for a period of time.
Correct.
So you can make consistent purchases. You can look for opportunities in the market to continue to add to your position, say, in larger purchases when it makes sense to do so. You can look at maybe different products that you would think of immediately off the top of your head. You can talk to an advisor here at McIlvaney and look at some of the pricing discrepancies between products to look for ways to pick up different ounces or more ounces of a different product depending on what's going on in the supply and demand of the market.
Right. And this is the new normal, Miles. I mean, we are not moving into a slowdown, in my opinion. We're looking for opportunities which may not be as good as what we had hoped for, but people need to be focused right now because there's a lot happening. Back in the day, we would call people and list reasons why they should consider owning gold. Now people are calling us, telling us the reasons why they are buying gold. The shoe is on the other foot. This is a very different market than we've experienced for a great period of time. I mean, I can't even remember a market like this.
Yeah, the bullet point list is getting pretty long. Eastern Europe, China, South America, the Middle East. Domestically, we have banks going out of business, rampant government overspending. I mean, the list just keeps going on and on from there.
I've had a client call me last Thursday trying to move $2 million out of his bank, and it is one of the major U.S. banks. Working on it again today. They are fighting him.
I thought it was his money. Isn't it his money?
Well, that's what you would think. And I don't even want to mention the name on air, but it is a well-known bank, and he cannot get his money out of it. He is so fit to be tied. He may have to just stagger $300,000 a day for the next 2 weeks to get his money out of there.
And it's not like he's walking into the branch going, hey, clean out the vault of cash.
No.
This is digital money.
Right.
Speaking of digital money, there's probably the biggest bullet point. How'd you like that? You gave me a segue, I gave you one back. Digital money is becoming the hot topic, and we talked about the extended period of time that we've seen the Eastern world begin to take a little bit of self-control back over their own assets and natural resources, and realizing that unfortunately the United States has put us in a position where we're completely dependent on them, not the other way around. Well, we're seeing the same type of progressive steps taken towards the U.S. central bank currency. So for those of you out there I've certainly talked to, you may have heard me discuss that I have a limited, let's say, immediate concern over this. But I always finish that sentence with the fact that I am 100% certain that is something that will exist in a relatively short period of time. Now, whether that's 2 years or 10 years is irrelevant to me. I don't think it's a light switch event, though. I think that we're seeing the pieces get put in place now.
Right. And all the announcements that it's going to be rolled out on May 1 or whatever the date is, pick a date, it's already been in testing phase in a very small circle of banks and institutions. And they can do that, just like they can do it with Bitcoin and Ethereum. But it's not an overnight rollout. It will be phased in. People will get used to it. The ability of the government to attach a blockchain to our already digitized currency is going to continue. It's going to get better. Yeah, I would say, oh gosh, I don't even want to guess. But they are going to make this happen.
Right. So here's your client with his significant liquid, finger quotes, position in a private bank, a private banking institution with his private assets that he's having a hard time getting out because it's maybe not his money. Well, what happens when it's actually not his money?
Correct.
Or what happens when they put expiration dates on his money?
Correct.
Or what happens if they decide where you can swipe your card and where you can't?
Or if you are the kind of person that they will allow to spend their money.
Rob, I wonder if there's something out there that you can own that's easy to get rid of, globally recognizable, can walk into any pawn shop in America and get cash or whatever the cash equivalent will be 5 or 10 years from now transferred into your U.S. central bank account and then go spend it immediately.
Well, you wouldn't even have to go that far.
Yeah. Or swing by my house and buy a dozen eggs.
Or, stop by my friend Roger and get a half a cow. Or have my friend Wayne put your roof on for a couple of ounces of gold. Or my plumber who will do all the work you want done for silver. It's already happening.
Right.
But it's not just a situation where you go out and use it. It's also a way of preserving what you have worked for all these years. You leave your money sitting in a bank, whether it goes into a crypto dollar or not, 5 years from now, you can expect it to buy roughly half of the goods and services that you need to live than you can today.
Government is admitting you're losing 8% of your holding cash. That's what they're admitting you're losing due to inflation. So what do you think the number really is?
I don't even want to hazard a guess.
Hey, I know we're preaching to the choir here. I know a lot of our listeners are already precious metals owners, and a lot of you guys already work with us. So we certainly appreciate that. And I know that we're all on the same page here.
But remember, gold is like a smile. You can fly anywhere in the world, hold up a gold coin and smile, and know two things about you. One, you're trying to be nice, and two, you got money. It speaks a universal language.
It absolutely does. So that's going to do it this week for Golden Rule Radio. If you'd like to continue with your universal language, continue to talk with your advisor here at McIlvaney Precious Metals. So certainly give us a buzz. Bank ratings, retirement accounts, getting precious metals put away, getting cash moved out of massive banking positions.
Ridiculous.
There's a whole lot you can do and probably should be doing right now. Most importantly, you want to do it with some purpose, and you want to go into it with calm and conviction, but having a strategy.
Instead of waiting for a pullback of $30 or $50, which may or may not happen, it's more important to be focused about what you're doing. I like that word.
Right.
We need to act expeditiously in this climate, because 5 years from now, it won't even matter if you saved $50 or $60. Doesn't matter. You won't even remember.
So if you haven't talked to your precious metals advisor here at McIlvaney Precious Metals, give us a call. So we can be reached at 800-525-9556. You can find more info on Twitter at ICA Gold or on Facebook at McIlvaney Financial. Thanks for listening and have a great week.